Our next guest says one reason that they have been up recently, though, is global stability. Come on in, Dick Bove, Rafferty Capital Markets banking analyst. Dick, great to see you as always.
Thank you, actually.
Is there a lot of global stability out there? I think of Italian banks, not so great, but I guess that doesn't govern everything.
Well, no, it doesn't. And if you go back over the last 4 or 5 weeks, there have been so much positive information about banks that it's almost impossible to list it all. There were 4 banking conferences in which dozens of banks spoke. You had the Henseling bill get passed in the House of Representatives. You had a Treasury report put out by Secretary Mnuchin, which suggested major changes in the industry. You've had the President nominate 3 people to run the FDIC, the OCC, and the bank supervisory part of the Federal Reserve. You had short-term interest rates go up to reprice loans. You had long-term interest rates go down to reprice, if you will, the securities that they own. You know, you can go on and on. I mean, the 3 people who are appointees for the 3 agencies that I just mentioned are also the United States representatives on the Basel Committee, and the Basel Committee right now is dead. There's not going to be any regulation coming from that. You're going to get a change in the liquidity ratio requirements. And if you think about it, I mean, J.P. Morgan is sitting with $1 trillion in cash and securities. You've got companies like Northern Trust, which have 35% of its assets in cash. All this stuff is happening at the same time, and basically it's giving you a really strong underpinning for where banks may be in the next 6 months.
And also, Dick, you know, the Fed raising rates, albeit by 0.25%, but that's more money back on loans, so that's another plus. But I wanted to get your feedback on this. House Speaker Paul Ryan making a major tax reform speech at the Manufacturing Summit in the next hour. You know, listen, I'm tired of all the we're going to do this, we have to be on the same page, we have to act now, we have to. I'd much rather see action than words, but Paul Ryan clearly trying to rally the troops. What's your thought on that and the likelihood that we're going to get tax reform by the end of the year?
Well, I worry about the deficit in the sense that, well, obviously I'm a bank analyst, so I'm a fiscal conservative, right?
Right.
So the net effect is, what I take a look at, there's $20 trillion, you know, on the books debt, and maybe another 20 to 40 trillion off the books debt. Who's going to buy this debt, right? There are 4 classes of buyers of debt in the United States. You've got the Social Security and government pension funds that buy debt. You've got foreigners who buy debt. You've got Americans who buy debt. And you've got the Federal Reserve who buys debt. All right, the Social Security people are going to need money. They're not going to have excess money to buy debt. The foreigners, Japan and China, for the last couple of years, have been getting rid of the debt. Americans don't want to buy U.S. debt. The yields are too low, and the Federal Reserve is going to go into competition with the government in terms of it's going to let its debt run off at a point in time when they should be supporting debt. So, you know, I think, obviously, I would love to see solid tax reform, but someone has got to step up and buy this debt, and I'm not sure who it is. Yeah.
All right. We're already out of time. Dick Bove, as always. Dick, thank you very much. Optimistic about the bank. Says there's lots of good news all happening at the same time. Dick, thank you very much.